Hello everybody, I'm here, I'm live, but you don't really want to see my face right now. So, let's turn on the slides. Hope everybody's doing awesome. It's Friday, some crazy stuff went down this week, and the theme was literally non-stop. Recession, bear market, is it all over? It's coming up again and again, and people are losing hope. So let's break down the data and find out exactly where we are. Before I jump in, the crypto market cap is 2.73 trillion. Remember, not too long ago it was under $1 trillion. So it's nearly 3x from the bottom. Yeah, I know things suck. People want price to be a lot higher. Bitcoin's at about 84,000. ETH is still under 2,000. ETH dominance 8.6%. Fear and greed, extreme fear 31. And yeah, the sentiment sucks. And it's very tiring out there as well, because I know the sentiment sucks and I feel the pain that everybody has. And quite frankly, it wears on me. Anyway, I will be here every day no matter what until this bull market's over. Anyhow, shout out to Marcello. I got on your Patreon the very first day. Thanks for everything. My pleasure. And yeah, it's been a good ride, but it's been bumpy. And this bull market has been very bumpy, and there's still so much doubt. First of all, let's get into crypto. Crypto market fear and greed is still at fear 31. Not extreme fear. Fear. I got that wrong. It's under 30 is extreme fear, but it's still, people are worried. Now, the big rattler today in the market is from this guy. His name is Ki Young Ju, and he is pretty good at on-chain analytics. In fact, his whole business is about on-chain analytics. And the sentiment from him, he basically came out and tweeted today, Bitcoin bull cycle is over, expecting 6 to 12 months of bearish or sideways price action. Now, when you break that down, people will hear bull cycle over, they think they're going to die. But when you analyze it carefully, he's expecting 6 to 12 months of bearish or sideways action. T&D Tesla, why are you not in bed? It's very late your time. Thank you for coming. But this is what rattled a lot of people today. And I'm going to spend just some time on this because, again, a lot of the time people get spooked out of markets, and that's sometimes not a good thing. Martello, thank you for coming as well. Moto and Nick M. It's Friday. Happy hour is coming soon. But let's get back to this story. All right. So again, predicting 6 to 12 months of chop consolidation, that can happen all the time. We've been through that after the halving. We've been to that before the halving, etc. And a lot of people challenge Key's views, like Mr. Big and Britain in shorts, expressing a lot of skepticism and outright disbelief, suggesting the bull market is still on. Others believe him. And everybody, I mean, if I surveyed everybody, I'd say half are actually bearish. But the problem is broader context. You have to look at the macro. Okay, there is a cooling macro growth around the world, in the US, etc., Europe. CEO confidence, we'll talk about in a minute, 13-year low. A lot of people are freaking out. Now, on a positive though, we'll get into it. The on-chain data is not bad. So if we look at history, which I spend a lot of time looking at, and you look at all the Bitcoin bull market peak indicators, you know, when we do the top and bottom indicator, which is either we're heading down or we've never actually had a bubble off top. But all of these indicators are not firing. We haven't hit them, which means there has been no peak. And also, shout out to Dr. Rob Redford. He made a cool post in Discord today. And he suggests Bitcoin, and I agree with everything that he wrote. Hey, Andy in Australia, Bitcoin isn't in a bull market currently, or is it in a bull market? But if you look at its modest 13.5% real value increase over the last 4 years, when adjusting for 27% inflation since March 2021, a bull market could still emerge. If this is a bull market and you take into account debasement, nothing has happened from the previous all-time highs. We should be at least at 150,000 or higher in today's dollars. Remember, over the last 4 years, the debasement has been wicked, absolutely wicked. Now, we did come up 356% from 15.5 to 84 in March, but we were as high as 109,400. And still, there's players out there that are buying it all. So this thing is scarce. But let's have another look at some more data points. First of all, this is the chart from Econometrics. I thought it was really cool today. And it shows you the divergence we have from historical post-halving patterns. And this is not just a temporary anomaly. It signals a fundamental market evolution. After the halving in the past, things kicked off. This time, nothing. Hey, GQ Trader, thank you so much. What's interesting about this current run right now is the fact that we've gone down over the past 3 or 4 months when we should typically be going up when you compare to previous cycles. That is not the case. So the orange arrow I included at the bottom shows you how far we've come off. Now, what's also unusual about this bull run is Bitcoin actually rallied to a new all-time high before the halving, and that has never happened in history. So it came out of the gates a little fast. That can be taken into account here. But if you break this down and look at where the price should be, if we had anything like previous returns, an average trajectory from other cycles, the price of Bitcoin would be $1.12 million, which is, again, stupidly high. If we followed the third halving, we'd be at about $500,000, etc. So this time is different. This time there are diminishing returns. However, if you look at the past, it's very clear we have a long way to go. It's unlikely the bull run has ended so prematurely. It could. I allocated 10% chance. We may have topped at 109,400, but I still do believe we have more legs because of what I'm seeing with the buying and the hardness of the asset, and the fact that literally we're seeing a time now for Bitcoin where institutional flows and macroeconomic factors are driving the bus, not the retail investor, and not the supply side event like the halving. It's a different ball game this time around. Now, another thing that's kind of interesting is over the last 5 days, the ETFs, after having the worst 5 weeks in history, the last 5 days they pulled in $700 million, which is not to be sniffed at. That's 0.7 billion, and $1 billion is a lot. So it's still, these things are still alive and well. And if you look at the money coming in from Fidelity and BlackRock, it's pretty huge. Remember, many of their investors now are automatically investing in Bitcoin, making up 1% to 2% of their portfolios. So there'll be that perpetual bid coming in too. We know Saylor is finding ways to buy, although he has slowed down a little bit. But we'll watch him very carefully. He does have plans to issue a lot of debt. Stark, STRK and STRF. I call it Stark because I pronounce the tickers. I remember tickers. Sometimes I don't remember all the names. Anyway, another thing that's kind of interesting is gold has been on fire. There are nations like China and Russia that are stacking gold like there's no tomorrow. Nobody gave them the memo, however, that Bitcoin is a better gold than gold. But anyway, Russia boosted its gold reserves to a record-breaking level, hitting 217.4 billion as of March 1st. And now 35% of their overall foreign exchange reserves are in gold. Imagine the day where it would be in Bitcoin. That means they'd own 10% of the supply if they were to build a Bitcoin bag as large as their gold bag. Anyway, we'll see. Let's also talk about some other crypto stuff that's happening right now. deBridge has eclipsed Wormhole from Syndica. The fully diluted market cap, I think, of Wormhole is about $1 billion, and deBridge is about 230 million. But now deBridge is doing more volume. That's interesting. They got 55% market share, despite having a 4.4 times approximately smaller market cap. So there might be a little mispricing here. I'm going to look at that more carefully and try figure it out. Also, we know in the last week, the SAMD 0228 failed, which would have brought Solana inflation down to the level of Bitcoin, making it very hard. And it needed 66.7 to pass. It only got 61.4. So it was close, but no cigar, as they say. And record SOL amount is locked in DeFi, 8%. So this makes, again, the asset pretty hard, which will be very interesting when it comes to the Solana ETF, which is coming. In fact, thank you, Sean Donnelly. In fact, Fidelity registered their SOL ETF, and Fidelity now have assets under management of nearly $5 trillion, and they are looking to build their SOL ETF fund in Delaware. Surprising people are still in Delaware, but that's a separate issue. And Tether coming clean. A lot of people, like, there was for years and years and years, we had to live with a thing called Tether FUD. And now Tether is working with a big four firm for a long promised audit, but it hasn't said which firm it will work with. The big four, by the way, are PricewaterhouseCoopers, Ernst & Young, KPMG, or Deloitte. I'm not sure who they're going to be working with, but I also know that they've been working closely with Cantor Fitzgerald, which is Howard Lutnick's old firm, who is now part of the administration and very pro-Bitcoin. And they know Tether is squeaky clean. They know they have the reserves. So there was all that FUD for years and years and years was all for nothing. Tether, I think, have about 94 billion in US treasuries, and they made 6.2 billion in profit last year. They print money, and guess what? They have 83,000 Bitcoin, which is worth 7.6, 7.7, 7.8 billion dollars. They could even have more. They were buying Bitcoin with their profits. Very clever strategy. So they are completely liquid and fungible. Let's talk about stocks real quick. Fear and greed is worse than crypto. It's a 22 for the stock market. And a week ago it was 20, so it's creeping up a little bit. And the markets have rebounded nicely. So we did bottom. It was pretty clear in the markets about a week to 10 days ago. Now this is interesting. The S&P Outlook, different firms have different perspectives, but they all seem to kind of say the same thing. JP Morgan, Bank of America, and Morgan Stanley gave their outlook on the S&P 500. And while everybody thinks a recession is coming and the market's dead, JP Morgan believe the S&P 500 is nearing a local bottom. And this is good news, especially if you are an US equity investor. Bank of America also predict a tiny bit of S&P 500 downside, about 300 points from where we are today, from 5,600 to about 5,300. One specific conditions are met, and they do believe rate cuts will come, which will trigger a rally. And Morgan Stanley believe if the S&P 500 falls another 100 points, it will spark a very big rally. And again, either way, we're close to the bottom, and now the big banks have the courage to say that too. Now, another interesting news as well, emerging markets have gotten hammered over the last 15 years, 18 years, absolutely destroyed, where the US stock market had complete dominance. But for the first time in 15 to 18 years, the US share of global market cap has declined about 3.5% over the last 2 months to about 50%. And that's the lowest since Q2 2024. Now, a lot of this has to do with kind of the DeepSeek, the AI rattling, the drop in names like Nvidia and Tesla. Vitruvian, thank you for coming. And all these things, that has an impact. If they rebound, this chart will rebound as well. But we'll see. Either way, the money will go where the narratives are. And that narrative is artificial intelligence. And I don't know how big the AI stocks are in emerging markets. They are nowhere near as big as in the United States. Speaking of AI stocks and AGI stocks, Tom Lee believes that Tesla will make an explosive move coming. He is extremely bullish on Tesla, and so are his technical analysts on staff. So we'll see if he's right. By the way, I will do a little video on this company tomorrow. which will be segregated so people will not get upset. And sadly, another little piece of bad news as well this week. CEO confidence crashes. This is the confidence among US CEOs, and it's fallen to a 13-year low. Shout out to Sanjay and Kobeissi. But it's dropped 5 points in the last month. And basically, I think it surveys about 220 to 250 American CEOs. And this is the steepest fall ever recorded in the poll's history. So CEOs are nervous. They are nervous about macro. They hate the high interest rates. They can see business conditions are slowing. These are the people with their finger on the pulse of what's happening in the economy. And they're a very good recession indicator. But as I always say, by the time the government reports we are in a recession, we're already coming out of it. As I mentioned before, the big banks believe the S&P 500 has bottomed. The CEOs, however, are still feeling some pain out there. And they foresee, when it drops like this, they foresee worsening conditions, which can be a little bit concerning. The other bad thing about this too is when CEOs are concerned, they tend to shed headcount. So watch out there, everybody. Be careful. And meme of the day to cheer everybody up. This is funny from Leonidas. Escape the 9 to 5 and now to do the 24/7. For those people who work 24/7, but remember, when you work for yourself, it's fun. I want to thank everybody for coming. TND Tesla, Sean Donnelly, and Vitruvia Music, and the whole gang of Adam and everybody else. I appreciate everybody turning up. And sorry for being late again. I hope to be back on time tomorrow for the quick what happened this week. This was Friday Fire. Hope you like the show, and I'll see you all tomorrow. Good night, everybody. Thank you for coming. Bye-bye.